Gold prices have traded within new ranges so far today in London trading, with safe haven buying on a softer dollar providing key support for the metal throughout the week. Still, the greenback seems to have stabilised at current levels, as with equities, with key US stocks opening in positive territory today. Another drive recently, Brent crude oil, which has been a driver of safe haven buying this week, has staged a small recovery today, which could weigh on prices, although it remains near 4-year lows. Furthermore, despite the weaker dollar, the metal is still looking for a catalyst to help define a near-term outlook, with a break above resistance at 12.50 the next big step for the metal. Physical demand has also been helping with this process, particularly out of India with the Hindu festival of Diwali next week. However, this is both unsustainable and, according to sources, not as strong as it should be, considering the current price of gold. Safe haven buying should continue for the time being, however, with oil prices and world growth concerns both playing into gold's hands, bolstering its credentials as a source of safe investment. It is limited, however, with interest rate hikes in the US and the impending end of quantitative easing. Elsewhere, lacklustre US data has weighed on the dollar in recent sessions. Retail sales for September dropped, and the country's PPI and Empire State manufacturing index were also lower than predicted. This has raised concerns that the US economy is faltering, with struggles of Chinese and Eurozone counterparts already weighing on sentiment in currencies. Elsewhere today, the US building permits and housing starts both hit forecast, while consumer sentiment figures came above predictions. Earlier today, there was of course focus on Fed Chair Janet Yellen's speech in Boston, which many thought would have centred on the end of quantitative easing this month, especially considering some of the odd comments coming from her Fed counterparts, questioning whether it is too early to end the programme. However, it was instead focused on income inequality in the US. In other news this week, we've heard that the LME will now be administering the palladium and platinum fix from December, which will certainly make things interesting when we hear the news of the gold fix, which has, in essence, made a mockery of the assumption that Thomson Reuters and the CME Group would automatically gain the fix after their victory with silver early this year. In the metals, spot gold was last relatively unchanged, around $1,240 per ounce, with the euro around 1.28 against the dollar. In other metals, silver remains range-bound. It was last trading around $17.33 per ounce. Platinum and palladium had fallen on fears that a slowing economy would reduce vehicle sales, and in particular the effects of this and oil prices on the already struggling Russian economy. But both have since corrected. Platinum was last at $1,254 per ounce, while palladium, which fell $30 yesterday, was last around $750 per ounce. This is Ian Walker reporting for the Bullion Desk, down here at the London Metal Exchange.